Federal Reserve Chair Jerome Powell is not done. His message is loud and clear. He will keep raising interest rates to squash inflation. This has been his line for a while now, but now he's upping the ante. He's hinted that the cost of borrowing money may reach a higher peak than traders and policymakers anticipated. This is particularly interesting because after the Fed raised interest rates by another quarter point, markets ignored his warning that rates were headed up and rallied anyway. Milder readings on price pressures further reinforced the market's optimism. Powell spoke to David Rubenstein during a question and answer session at the Economic Club of Washington. This time, Powell made it crystal clear, saying, and I quote, "We think we're going to need to do further rate increases." Nobody wants it. The labor market is extraordinarily strong. Powell went on to say that if the job market remains good, they will do more. Rubenstein asked Powell if he would have raised interest rates higher had he anticipated the low unemployment rate. The U.S. recently added 517,000 jobs, according to the Labor Department. This is way more than the 187,000 jobs the Dow Jones had anticipated. Powell skillfully answered the question by not answering the question. He said, although data is important to their decision, they don't rely on variables when making decisions. The low unemployment rate, the lowest in 50 years, was a surprise. Tech companies have been laying off workers since the last quarter of last year. Some estimates show that the tech sector has laid off more than 152,000 employees. So how did unemployment get so low? It seems that the leisure and hospitality industry is hiring and thriving. And this is not surprising. Things are getting back to normal and people are pumped to be able to go out and travel again. According to the report, other sectors seeing growth in jobs include government, healthcare, retail, professional and business services, construction, transportation, warehouse, and manufacturing. If you look closer into these industries, they're the ones that got beaten up hard by the pandemic. Now that things are opening up again, they want to regain what they lost. But the question is, will this last? Some experts think this is a temporary push. Remember that unemployment rate measures the number of people who are out of a job and are actively looking. There's also 5.3 million people who wanted a job but weren't looking and therefore were no longer counted in the statistic. The pandemic changed the perspective of many Americans. There's a wave of former 9-to-5 employees who are forced into moving out of the city and into the suburbs or even rural areas for a simpler lifestyle. They're forced to make a living decision and one that doesn't involve their employment. And all of these people, these 5.3 million people, are not on the chart for the unemployment. Ben Zipperer, an economist at the Economic Policy Institute, said that two things could force more people to job hunt. One is the debt ceiling. If the government runs out of money, it will be forced to cut spending, and that means layoffs. Another is the interest rates. As Powell clearly stated, he will raise interest rates if necessary. This will stop people from spending, and this will create a domino effect in the economy. All these uncertainties highlight one thing. You need to invest while you can. Invest while you have the money to invest. That way, if your job or your business becomes an economic casualty, you know your future won't be jeopardized. Make sure you talk to a financial advisor, talk to people about money. If you're looking at investing in some old money, gold and silver, Noble Gold Investments has a comprehensive gold and silver investment guide you can download for free. You can learn more about silver and gold, how they compare to other assets, and the advantages and disadvantages of investing in them. Download it for free at noblegoldinvestments.com.